Good morning, ladies and gentlemen. Once again, welcome to the daily dossier of Ask Abhishek Raj. Let me quickly share what exactly you should be doing in today's market. It's going to be very short and crisp because we had already planned for things maybe turning out as I told you in yesterday's session. Approach the markets with neutral view, and exactly same thing happened. All our stocks that we have open positions in, like Grasim and uh, Kotak Bank, more or less DLF, then we have Indigo. They all are doing all great. They all are doing great as I had told you. Stock specific views may work out, but do not make any market specific view in yesterday's session. So exactly same thing had happened. If you remember in yesterday's update, I had told you that markets went up, but with volumes almost half of the previous day. Now, exact opposite has happened in yesterday's session. So let's take a look at the data. Let the data talk about it. Starting with the fund flow, foreign institutions almost did not buy anything. It was just a minuscule figure of 7 crores. Domestic institutions bought about 120 crores only in cash market. Then we have index futures were sold about 771 crores by FIIs. Then they bought options worth 2500 crores. Again, option buying should not be considered for a very simple reason. Yesterday was expiry day. Most probably the written puts were purchased. Stock specific, rather, lots of short sales have been done. Almost 1175 crore futures were sold. Stock options were sold approximately 52.8. One thing that's important in yesterday's session, that volatility was almost 3% negative. Now VIX stands around 20.5. So you can say the fall that we might be expecting, the negativity that we might be expecting, it would not be that sharp. Even if markets go into some kind of short-term correction, do not expect any kind of massive fallout or massive meltdown that happened in terms of corona. Now, even if markets go negative, it will be an annual correction, which we usually see anything between 12 to 15 or maximum 18%. So that's the worst thing that may happen. So let me quickly tell you what exactly you should be doing. Yesterday's markets were flat to negative, volatility 3% down, buying was kind of minuscule. Once again, Nifty's PE is at 20 years high, so keep a watch. Portfolio investors, as I said yesterday itself, that you should be booking some profit. If you would have booked some profits, you would save money for sure. In case you did not, you missed the opportunity. Rest, you still have time. There's nothing to panic. You would get opportunities once again to sell at higher levels. Yes, it's not going to continue. It's not going to rally like down negative, but yes, we may have some volatile sessions. Rest, let us not forecast what may happen down the line. 5 sessions, we will just prepare for today's session. Looking at Nifty, again, it had taken support at 20 days moving average, which is placed around 11,400. So what we believe, as I had told you, markets would be negative below 11,300. So 11,400 is where we have 20 days moving average for now. It may be tested. So that's one thing that may happen in case markets start trading below 11,500. 50 days moving average is placed around 11,080. So in case there is any kind of fall below 11,400, we should be prepared for a fall till 11,100 to maybe 150 max. RSI is kind of positive, but MACD is negative on daily charts. Traders, again, as I said, keep stock specific view. Do not keep market specific view. Do not buy the stock because you're expecting markets to go up. Keep stock specific view. That's what is going to rule in this market. Bank Nifty is one thing where we have some negativity because in yesterday's session, Bank Nifty closed below the fallout of on Monday. We will even below. It's the lowest closing since the Monday's fall. So once again, it's a Friday. So volumes would be kind of shallow. So looking at the other numbers, Bank Nifty most likely looks like it will be testing its 20 days moving average, which is placed around 22,750. So in case there is a fall below 23,500, the levels to watch out for would be 23,300, followed by a kind of psychological level 23,000, the round figure. Rest, The next support, the strong support that Bank Nifty would be getting, that would be 22,750 levels. MACD, RSI, both are positive on daily charts. Once again, keep a stock specific view, not a market specific view, even in banks. Overall, this is how you should be planning your day. This is how you should start with your day. Nifty is positive above 11,600, negative below 11,500. Rest support is 11,300, followed by 11,000 trade, no trade in Nifty. Bank Nifty, in case it goes above 24,400, only then we would have any positive view. It's negative below 23,500. Support is placed around 23,300, followed by 22,700. So you can short Bank Nifty below 23,400 with stop loss of 23,800. Remember, the next support is 23,300. So I would recommend to write some options as well to ensure that risk reward is justified. Risk reward ratio, in case Bank Nifty takes support at 23,300, it would not be a good risk reward ratio. But again, in case there is a fall, I do not think Bank Nifty would stop anything below 22,800. So in case I sell below 23,400, I am actually targeting somewhere around 600 points of fall against 400 points risk, and even the stop loss would be modified later on. 23,800 is the stop loss just to begin the trade. Later on, in case 23,300 is the way markets behaves around 23,300, we will decide how to exit, what would be the exit plan, whether we should keep it longer or do option hedging or do whatever. But yes, one thing for sure, if I were you, I'll start shorting Bank Nifty in case it goes below 23,400. Metal index looks positive, but the point is it looks like making a double top. Yes, metal index took support initially on 20 days moving average, went up, but again did not break the previous highs. So there's a congestion band that has been formed on the upper level. So in case markets go negative, we may see some deep corrections into metal index, or maybe it would be headed toward testing its 20 days moving average. Nifty IT looks bullish, but one thing to take a note on, in yesterday's session, Nasdaq is not doing well. The IT index of United States is not doing well. So wait for an opportunity, wait for a dip to buy. Do not ride the rally. This is not the market to ride the rally in case the stock is shooting up. This is the time when you should only be buying the dips in case you find a good reason. Because see, the point is markets are now falling with higher volume and going up with lower volume. So eventually, this is kind of creating a situation of distribution. If this continues, if the distribution continues, we may see a downtrend as well. But again, it's not yet decided. You need to wait. We need to wait to see how data flares out. Pharma index is trading below 20 days moving average, but it is a defensive sector. So in case it goes above 11,550, we may buy some stocks like my first preference in pharma index would be two stocks, Biocon and Davis Laboratories. Nifty energy is exactly at 20 days moving average, so a lot of things would be decided in tomorrow's session. If in case first 15 minutes is weakness, you can be finding some short opportunities in energy stocks. Rest, do not approach the market with any biasness. Let's be unbiased, because this is the time where markets could be making some sort of decision. So if we would be unbiased, we would have opportunity to grab the direction wherever it goes, be it long or short. So no stocks for today. I'm not giving you any stocks for today. I will for sure share in case something happens during the market hours. So that would be all. In case you want me to help you plan your trades, your portfolio, your investments, your hedging, anything where you need input, you're most welcome. Comment, like, subscribe, and let's meet over a 30-minute Zoom call. You can find the Calendly link in the description or in the comments, or in the caption. So feel free to schedule your 30 minutes free Zoom call conversation. So that would be all. Abhishek Raj signing off. Stay healthy, stay wealthy.